Good afternoon, friends, to all attendees in South Asia, Africa, and Europe. And good evening to all of you who are joining from Southeast Asia. This is the second in series of conversations on ThinkAg's 2021 AgTech Landscape Report. The investment report has been the outcome of really a collaboration effort from all of you and others who are not there today. Everybody is given their time and insights which have got captured in the document. I also want to point out a big thanks to our partners in this journey, Rabo Foundation, Biocrop Science, and ADB Ventures, who have supported this year's report. And also want to thank all our other partners and members who've been supporting the journey of ThinkAg in accelerating the AgTech scene in India and the region at large. As with any document, ThinkAg is solely responsible for the content, and we look forward to your feedback and support. The document is available on our website, thinkag.co.in, and that will be flashed on the screen at the end of the panels. So today we have a double header planned for you. And the first panel is on Indian corporates, and I'm using the word Indian liberally. It includes multinationals also operating out of India. And I think, and of course, Indian companies operating internationally are equally multinational. So Indian corporates and their engagement in the AgTech space. The panel is being moderated by Dr. Raman Ramachandran. He's the MD and CEO of PI Industries. And prior to that, he was the chairman and MD of BSF India and head of BSF local entities in South Asia. Dr. Raman has been in the ag input space for over 2 decades and brings tremendous corporate experience and experience of investments. Without much further ado, I will hand over to Dr. Raman to take this on, who's now back live with video. Over to you, Raman.
Can you hear me, Raman?
Yes, thank you.
Yeah. Okay, so a very good afternoon to all of you who have joined, as I heard from all over Asia and also all over India. I have here a very distinguished panel who will be discussing the corporate perspective on Indian AgTech. The panelists are, and I'm going to quickly introduce them. To start alphabetically, Burgess Godrej from Godrej Agrovet is the Vice President responsible for integration, digital, and special projects. Mr. Ram Kaundinya, Management Consultant, former CEO of Advanta. Mr. Sanur Kaul, who is the CEO of Origo India. Simon Thorsten Weibusch, Chief Operating Officer of Biocrop Science India. And Dr. Taslim Marif Saidi, Center for Cellular and Molecular Platform. And Vikram Shroff, Director from United Phosphorus Limited. So thank you, gentlemen, for joining this, this panel. I will set the context, so to speak, with a very key summary from the latest report from ThinkAg on the AgTech in India, the investment landscape report. Just to put it in the context, Indian agriculture is, if I were to kind of phrase in single phrase, one of the largest stake industry because the food security and nutritional security of nearly 1.5 billion people in this country with increasing per capita income and consequently increasing aspiration to have more balanced food. The Indian agriculture is really responsible for that, and it has, while it has met these challenges over the last 7 decades, these challenges are going to continue to increase and consequently there is a need for increasing per unit productivity. Food safety has become a big topic. Higher farm income, a very recurring theme in this country. The balancing the need for the quantity as opposed to the quality of food. Couple this with weak agricultural infrastructure, the need to reduce substantially the farm storage losses. All these are huge challenges, which are also opportunities. Opportunities not just to increase and meet the demand of the future, but also opportunities for entrepreneurs. In addition to that, the Indian farmer, any farmer anywhere in the world has to cope with a number of different variables which are quite unpredictable. Increasingly, this is also getting compounded with climate change as well. So it is in this context that it's very exciting, and it is also invigorating to see the expanse of agri-tech startups in this country. And as we speak, there are 600 and we are counting. We're trying to leverage the digital and other science-based technology to solve many challenges that this industry faces. I must first take the opportunity here to thank ThinkAg for coming up with a very comprehensive report or a compendium on the kind of investment that is happening and kind of giving an overview. So if I were to summarize a very few key things that came out of the report, there are 600 plus active AgTech startups. About $1.9 billion has flown into this since about 2010. And of that, about 1.7 billion between 2014 and 2019. The average ticket size is about 1.1 million. And there were about a total of 380 transactions across 105 unique deals. And today, about 14 million Indian farmers are interacting with benefit from the ag startups. And this area has been seeing about a 48% growth in the last about 5 years. The AgTechs in the Indian landscape falls into kind of 7 broad categories. There is ag biotech and biomaterials, ag fintech, upstream supply chain requirement, downstream supply chain, precision and digital ag technology, robotics and mechanization, and ag infrastructure. So those are the broad categories into which the various ag startups of today kind of targeted. There are quite a number of trends that are very clear. The rising deals and values, but it appears that the Indian AgTech landscape is still well behind saturation levels, particularly if you compare with global. But more money seems to be going to few startups. Downstream seems to attract bulk of the investment that is happening. Ag fintech, precision, all of these have been attracting, but there has been very muted investments into ag biotech and ag automation. And more recently, I think there is a consultative paper that's been released by the government on India's digital ecosystem agriculture. So very important question that comes to the panelists is also, is this going to create a supporting environment, or do we see regulations being imposed which is going to constrain? So that's broadly the kind of trends. And with that, maybe let me start the discussion with the panel and start posing a few questions to get the discussion going. And maybe I will start with Ram Kaundinya, who has been kind of associated with ThinkAg and the startups for a few years, almost right from the beginning, and ask him that over these last 4 or 5 years that you have seen and been interacting with the AgTech companies, what is your single top learning from dealing with these companies? Associated question is, what are the real problems, in your opinion, that AgTech digital solutions are addressing? And perhaps can you illustrate with a good example or an example what are the real problems that are being solved?
So, thank you, Raman. Hello, everyone. Let me try to answer that question. like you mentioned earlier, there are 7 buckets in which different AgTech enterprises can be classified. So that is a broad way of looking at the functionality of some of these things. But I would say also that there are the pre-production stage AgTechs, and then there is a production stage AgTechs, and then the post-production stage AgTechs. If you look at that way also, you will find that most of the input that is pre-production or even during production time, the most of the inputs and the output management supply chain systems are attracting the best attention of people. Not only because they are digitizing some of the traditionally inefficient systems, especially on the output side, which have remained inefficient because of the constraints of time and space and effort required to bring efficiency into them, but also because the technology bridges those gaps. And the farmer finds immediate value in those things. I think at the end of the day, what the farmer finds useful will be what will bring him immediate value, right? So that if you use that as a filter, I think many of these things which are giving him value in terms of the supply chain optimization or improving supply chain efficiencies are gaining more traction, both on input and output side. So which is in terms of our language, we say connecting farmer to the markets, both input markets and output markets. Another area which I think is also picking up is quality assessment of the output, which also is actually an essential need when you digitize the output supply chains, because it has to eventually become a part of the online solution that is provided to them. So that is also, I think, which is picking up momentum. What is actually perhaps required in terms of the other objectives we have of natural resource conservation or improving yields, improving efficiency of production, that is in the middle space where we want the farmer to improve the efficiency of production. There, I feel that we are yet to pick up this, where actually maybe farmer needs more help, but it is not yet picked up. And it will be interesting to listen to Vikram on that, because they are offering some of those services also. But I think that is an area which needs a little more attention to see what can actually trigger it better than what it is happening today. It may take some more time. I feel that in some of those areas, for example, warehousing and logistics is picking up, but it is again beyond production, beyond it's a post-harvest type of a thing. But on-field advisory like soil, water management, pest management, identification, recommendation of technical solutions for his problems. These are some of the things which I think have a lot of value, but is the farmer perceiving the value? Is a question mark. I think that is something on which we need to work. Like you also mentioned, I think biotechnology has a huge value. FinTech has a huge value, but they have not got the traction that they should have got. So I think there are some areas which we are yet to understand why the traction is less. Because I believe that at the end of the day, whatever farmer finds value in will have more propensity to find traction. If the farmer is not finding value, then the propensity for traction will be much less in such things.
Absolutely, Mr. Kaundinya, thanks for that. And I'll just have one follow-up question, because you brought out a very important point about farmer realizing value. There are a number of startups which are really trying to use data to provide, good advisory, so at very local level to take decisions, etc. Maybe we'll get some input about how effective these are, but in your experience, are farmers willing to pay? Or would they kind of consider this as an added service with either a market link company or an input provider? Maybe you can make a quick comment. So, and then
I think there are two aspects. One is willingness to pay, and second is ability to pay.
Yeah.
I think in terms of willingness to pay, he will be more willing to pay, like I said, where he finds value, because then he will then make a cost benefit analysis and he will pay. Like data services, for example, is data services currently are more useful for corporates who want to use the data to provide better service to the farmer. But is the farmer able to use the data better is a question mark at the moment. So I think willingness to pay is more where he finds value, but ability to pay is also a question which we must see because of the cash flow peculiarities of agriculture. Even if he wants to use a service in the middle of the season, is he able to pay for it? And without access to the output in some way or the other. So will the service be rewarded? Is there a revenue model there or not? I think that is something which needs to be debated.
Okay. Thank you, Mr. Kaundinya. So I'll move on to Simon and Burgess with a very specific question about a corporate perspective on the AgTech startups that in the country. Now, if you look at the investment report, a very telling kind of conclusion is that most of the investment that is going into these startups are from non-traditional kind of sources. And there is almost, other than UPL, and we'll come to Vikram later, almost no kind of corporate investment at this point into some of these digital startups. So I just want to kind of get your thoughts about, from where you sit, why do you think there has been this hesitation? Is this going to change? What is your perspective? Maybe we start with Burgess and then move on, or maybe Simon, why don't you go first and then to Burgess? Yeah.
Okay, I was going to give Burgess the first start.
Well, you unmuted yourself first, so you get the first.
Right. All right, thank you, Rama. Sorry, Burgess. I mean, first of all, I think what we need to say is India is a tremendous opportunity in several ways. First of all, obviously because of the size of the local market, but second of all, also because of the capabilities of the digital sphere. So to a certain degree, for a corporate, it is interesting to watch what is happening in India and tap into that, right? Now, with all due respect, I think one of the topics we need to see is that corporates are often much better at judging a potential of an existing business model than buying into a vision. And that is maybe why you see what you're seeing there. And a company like Bayer does have global venture funds and does also fund ventures. But often these will be ones which already are a bit more mature, if I may say so, where they say scalability into other countries or also global scalability is just as an outright, right? From a digital farming perspective, I think we also need to see one point, which is that usually digital benefits come with network effects. And when we look at India and rural, very often I still struggle to see those. Yeah. So if you want to approach me, I would ask you what is my benefit to cost to serve, right? And very often what you find is the investments would almost outstrip the cost of my running operations today. And to have that, may I say, trust in the system to say, I cut down on my field force, if you like, and hand it over to a digital model which hasn't proven itself is just not very practical to believe for me to do that. So that's maybe just two very concrete reactions I would have to that question. Thank you.
Now, Simon, I think that's particularly the last statement is something that I know many of us are kind of pondering over or struggling to come to grips with. But Burgess, over to you.
Yes, I agree with Simon. He's made some great points. I'd like to add to that even though corporates may not directly invest in startups, there's often partnerships with corporations and startups. For example, we've invested in a venture capital firm that was started by Mark Khan, who used to work with Agrovet. It's called Omnivore. And through that, we do get insights into what startups are out there, and we are supporting those startups indirectly. In terms of direct investments, we've had a very successful experience investing in Maxi Milk, which is a dairy breeding startup started by two Israeli scientists who actually came to India, established a center there, worked with our team. We incubated them, and they were very much in line with our strategic vision for what we wanted to do with dairy and had linkages with other divisions like our cattle feed division. So that's why we decided to invest in them, and we got operational control with them. And a few months ago, we bought them out completely, and it's now a subsidiary of Agrovet. So there definitely needs to be that operational focus. We need to be closely aligned with the startup's vision, and it needs to strategically complement what we're doing. I think if startups can show that to corporations, then there'll be more collaboration and direct investment opportunities. One other point is that if you are a listed company, then investing in a startup does open you up to much more scrutiny. So companies may be a little bit more averse to do that because they see that, you know, there could be very high upside to investing in the startup, but there's also very high downside if you lose all the money, because ultimately the vast majority of startups will fail. That is the sad reality. So that's another thing to keep in mind if you're approaching a company that is publicly listed.
Yeah, thanks, Burgess. I think it's a very good point from a listed company perspective. So I'm going to move on to a slightly different topic, and I want to address this to Dr. Taslim Arif. So one very key trend that we notice is that 85 to 90% of the startups and the investments have really been focusing on business model innovations using digital technology, while very little on science-based, product-based kind of innovations, either using biotechnological and other kind of approaches. And I just wanted your, I think you're kind of closely involved in that space, and I wanted your perspective on the landscape for the non-digital science or biotechnology-based product innovations in India. Why hasn't this really, if you compare this with what happens in the US or what happens even in China today, I think our kind of landscape is pretty dismal. And I really want your kind of perspective on where is the gap? Is that a skill or a competence gap? Is it a lack of an enabling environment? Is it a complete lack of interest from the corporates? So any thoughts, and can you put some perspective on that, please?
Oh, thank you, Dr. Raman, and it's good to be here. I think I feel that your observation is quite spot on. Something that we have seen, and I'll just give you half a minute background. So at CCAM, which is supported by Department of Biotechnology as an organization which attempts to catalyze deep science innovations, we have been doing innovations in biological space for a while, biological science space. And in 4-5 years in the game, we realized that while healthcare, there were some phenomenal ideas shaping up well, we sitting right next to a University of Agricultural Sciences called US Bangalore, we actually didn't see much from our own portfolio, some really good deep science ideas. And that was quite surprising. So more or less, we actually realized that's what not, and that is exactly the observation you have. We do not have really groundbreaking ideas which are taking forward like CRISPR-Cas technology that people are talking about. We are not talking about how we want to do a preventative in terms of infections for immune boosting capability. We are not talking about providing new kind of microbial environment for many components. We do not have really good targeted nutrition in terms of agriculture, or a control environment capability, or prevention of post-harvest loss, science-based thing. So you're absolutely right. So, and there is a gap. We can't shy away from that. And there are a few thoughts that I just wanted to make. Where does according to me for now, the gap stand? I think the way it has moved on in terms of healthcare, and we are seeing a lot of work and a lot of that we saw in healthcare space from in India, the startups have done really well, and we were really happy to be a part of this. Somehow the agricultural space hasn't been mainstream for science innovators in general, not for agriculture scientists. Health is a mainstream dialogue. We talk about cold, we talk about headache, we talk about heartache, we talk about neuropathy in general circle, but we don't talk about agriculture in mainstream. And innovators who come from outside agriculture space don't get to hear about real problems. And once you don't hear about real problems, you don't see them as an opportunity to do something and go and solve it. So I think that disconnect between mainstreaming and talking about the science and talking about it is actually a very crucial component. So allow people to come back. And that's one thing that we actually talk about. The second thing, when we talk about agricultural problems, we talk about, largely in general thing, I'm not talking about the specialist. We talk about the issue of the, infection or the water or pathology and other main things for many years. There are problem statements which are real but never spoken about. So there is lack of goalpost creation for innovators to come and shoot at it. And possibly that is something that corporates can do, according to me, in collaboration with other players to actually find problems on the ground which are there but not spoken about, and present them as a goalpost for people to come and do a free kick, to say that some free kicks, at least some goalposts will be covered. And we have attempted that model under what we call it as a Center of Excellence for Agri-Innovation. And Dr. Ram has been advising us on that. The third thing that we believe is that we have to kind of get the agricultural scientists also to talk about innovations. They have been largely doing the same thing, higher crop production, many other components. I think they're phenomenal, but I think there is some level of disconnect happening between them and the outside people. The way we are trying to get clinicians to talk about healthcare innovations, we need to talk about agricultural scientists to talk about innovations and then build on that. I would say that this can happen. The only thing is that we have to kind of change the traditional way of looking at the agricultural problems, change it, talk about it more, streamline it, mainstream, and then build on that. The last point I just wanted to possibly say is that many of us have largely felt that a solution that works in a geography in the West would work in local settings. It doesn't happen all the time. So I think building an exciting local innovations for local problems, because there are 360-degree perspectives that a problem have. And I think if we can build that notion that let's articulate our problems better and then throw it open to people to build innovations on that. That is a great way to actually solve it, because some problems like coffee stem borer or many other things are there for like decades. Why? Why haven't we been able to solve this? The only thing is to now talk it, just like we are talking about virus, we are talking about RT-PCR, we are talking about antigen tests. Why can't we talk about agricultural problems at large? Why can't we mainstream it and then build on it? I'll pause here. I hope I could answer some of the points that you had brought in the question. Thank you.
I think absolutely, Doctor. And I think one very key kind of message that I get from you is, if you kind of take the analogy with the pharma and the health side, the awareness, discussion on the big issues and themes and kind of identifying that as goals. If you are able to do that, you believe that you will see a lot more traction in terms of this. And clearly corporates can contribute it. And I think maybe one of the points that I would like to bring about later on to Ram, and maybe even now, what can an organization like ThinkAg facilitate, bringing these teams together and creating the awareness? Ram, maybe if you want to have a quick
certainly. I think we have been attempting this. We have organized a few roundtable discussions around it. But I think what Dr. Taslim Arif is referring to is a more comprehensive exercise of, a much bigger list of gaps that exist today, so that the innovators can focus their attention on that. And then we need to prioritize it, and then we need to put that in front of them so that they can pay more attention to that. I think that is what he's suggesting. Maybe we'll have to attempt that still.
Yeah. Okay. So thank you. And then we will just moving on. We have actually, Sunur here, who is very close to ag kind of startup and tech startup here. He runs a really interesting company called Origo, which is in this whole space of warehousing and, credit. Let me start with, maybe you can give us a 2-minute overview of what your enterprise tries to do, and I then have a very specific question about scaling of what you're trying to do, how rapidly have been able to scale up. What are 2 or 3 very limiting factors that you find as impeding your aspiration for scale up? And let's start there, Sunil. Over to you. Yeah.
Sure. Thank you, Dr. Raman. Just in I guess, a very quick summary overview of what Origo does. Our main objective is to close the network gap on the supply chain. We do it through 2 means. One is, of course, as you said, we do warehousing across the country as well, try to get the farmer deposits in and connect them to either MSP, PDS stock that we hold. That's one side of what we do. And the second is the trade and finance disconnect that is there. And that's, I think it's much, much larger. Close to what we anticipate is anywhere between 70 to 100 billion is the trade and finance deficit or the gap, which because of lack of creativity or just the understanding of what financial instruments can connect and fund the supply chain, particularly in India, I think it's not so much in the developed world, is what we are trying to establish. So I think we try to create a more networked environment to be able to fund the buyers who are trying to buy from farmers, FPOs, etc. So that we call it as structured trade finance as a segment. And I think that's been catching on relatively quickly over time. So essentially, that's what we do just in terms of who we are able to service and what scale. I think just I think on the warehousing side, it's primarily the government and some of the key clients and the corporate side. And on the structured trade side, it's the corporates on one side and the farmer connecting on the other side. And what we have seen through technology is we launched our fintech platform this year. The network effects have been astounding. I think the enrollments that we have seen or in terms of the financial capability and the network we created in terms of procurement, the price benefit that the industry could see, we've seen in the range of 2 to 5%, which in agri means a lot. While these numbers sound very small in terms of what benefits there are, but imagine a buyer getting a benefit of 2 to 5% on the purchase he does, and the farmer as well, because of disintermediation. I think those hold the key. So, but yeah, that's essentially what Origo does in the agri, in the post-harvest space.
Yeah. And your scale up aspirations, and do you see kind of limiting factors? And if you could kind of address 1 or 2? Yeah.
Sure. So on the scale up factor, Dr. Raman, I think in terms of what we do on the financing and the procurement space is try to connect what we can buy from the farmer, FPO, producer put together and try to create the network effect so that they can see a national platform and then the buyers on the other side. The connect itself, I think there's a perfect platform out there which can have both the input side and the post-harvest side as a digital platform. And if that platform exists, it essentially allows the people who are taking the service of the input industries try to be able to provide their harvest to different buyers. And the whole disintermediation concept, the government doesn't need to intervene. That particular corporate or that particular startup can do. It's just that every state is the size of a country in India, right? So if you try to create the connect, the acquisition cost of any of these enrollments, like we just ran a couple of campaigns in Indore and Kota over the last 2 weeks. The cost of acquisition for each enrollment was anywhere between 1,400 to 2,000 rupees, right? This acquisition cost, it should not be that complicated. Just the spread is so high and the density is so low. Ideally, for this to be a success, it has to be anywhere between 100 to 300. And this acquisition I'm saying is of every farmer, FPO, and even the buyer. So even it's corporates who we supply corn to or anything else as well. So just the enrollment cost is very high. And the second is just the lack of trust in the whole financing space. So the country doesn't believe that the good quality produce is going to come on the other side. So it's very hard to get any fintech form to be able to become a many-to-many supplier. So it's very easy to do a many-to-many concept in a country like, say, US or Europe, because there's a trust factor that's there. Here, if you ask for corn, you don't know if you'll get like a 10% fungus corn, which is going to get supplied to you, and you don't want to pay for it. So somebody always has to act as a principal in between. And I think we as a company, we decided we'll put our skin in the game, and we'll put our neck on the line to be able to supply anybody who needs maize, we'll supply to them, or anybody who needs rice, we'll supply. And we would do that particular network effect. So ideal concept to gain scale is a many-to-many concept, many suppliers, many buyers. In India, that's a very, very limiting factor. So what we do is we break that cycle. We try to create many to one, which is us, we buy, and then we do one to many on the other side to be able to sell. Then we do structured financing for all the buyers. We provide them off balance sheet financing, etc., so that the network on the buyer side is able to buy a lot more. But the lack of creativity, and I don't mean to sound pessimist, the lack of creativity in financing options in country that are there to support agri customers is it's very disappointing, right? So you only have very conventional means to fund any agri produce in the country. Talk about capital markets linked to commodities, everybody will say, what does that mean? There is no capital markets linked to commodity. But you talk about aluminum linked to capital markets, there is a big market out there. So we executed 2 capital market transactions, and trust me, it took us 2 months just to get the regulatory approvals. It took us, and no harm, nothing against any of the regulators. I think they went well. It's just that these transactions are new to everybody in the industry. Now we are trying to push more. We're trying to talk to mutual funds. So imagine a farmer purchase being linked to any mutual fund investment that you do, right? Or any private investing that you do. That's a platform we're trying to, and that's the liquidity. So there is so much liquidity in the country today, right? It's astounding, right? But none of that liquidity is flowing down to agriculture. So if you are able to create that channel through this platform or any other platform, the corporate or us, any investment that Dr. Raman, you do, any 5 rupees or 10 rupees, or now I think the SEBI is like whatever, the 10 lakh rupees, that flows down to any purchase that is done from a farmer level, the price discovery would be astounding, right? It won't be the same that is there in terms of challenges today. So I think that's a role we play, but I think the lack of trust is one. I think the cost of the network effect is another scaling challenge. And I said the perfect platform is a platform which does both input and output at the same time, so that the net cost of acquisition becomes cheaper on both sides, both on the input and output.
Okay. So do you see partnership with potential input players, etc., as the next step, or do you?
We are trying this year. So we spoke with a couple of them. We spoke with a couple of seed companies so far, and I think the challenge is they have, so there's a great network effect, right? So they collect this, they supply the seeds, and then they collect the seeds back, right? Ideally, I would have been able to buy, so this is, I was talking to a seed company based out of Hyderabad itself, and they buy corn in Bihar back from the farmers. We were buying corn for our clients at about 14.50. What they were paying, what their distributors were paying the farmer was 12.50. So we could have paid a lot more to the farmer. We could have saved a lot of money on the corporate side if we were one company or had some kind of partnership. It doesn't mean seeds only, it could mean any input supplies, right? But they have to work hand in hand in terms of they have to see the benefit. Obviously, they have to see a commercial benefit on one side. But this disintermediation is big in the country. And I firmly believe it's not for one company to solve this one. As you rightly said, there's a partnership to be had. But I think it's just the win-win situation has to be just structured very well between like people who are trying to create this financing channel and the distribution channel on the post-harvest side, and people who already have a very strong and very strong network on the input side.
Yeah. So Sunur, I think there is a very appropriate leading question, which is I'm sure you've seen the India's digital ecosystem of agriculture, the consultative paper. So I mean, you identified quite a number of issues. Do you think this consultative paper, which is trying to kind of build some standards around all this, is this going to facilitate what you're trying to do? Any kind of early thoughts on that?
I'll have to relate to it a little bit more. I don't know if it actually solves the things that we are discussing in terms of the liquidity right coming down to the capital market liquidity flowing down to the farmer level.
I don't think it has got to that level. I think it is
So I
really
think
kind of
I think the correlation is still low. I again, not to say that the quality and the content is not there, but I think what the two topics we were discussing, essentially creating a merger of sorts in terms of how we can have the input and the output companies working together, and the liquidity from the capital markets flowing right down to the farmer level. I think that correlation is not as much
completely
there.
Yeah, not at all. Yeah, good. Thank you so much. I think now Vikram, I think really kind of looking forward to having this conversation, because you're one corporate which is really kind of delved into this digital area with the launch of the nurture.com. And you're trying to kind of provide the full stack agri services here. So maybe the first question is, I mean, you've kind of chosen the path of kind of trying to build your own, as opposed to perhaps, picking and choosing these startups with different kind of categories and maybe stitching them together. So quick thought on, why kind of try and build your own? A related question is also, as a kind of a full solution provider, and I think that's where you're going, do you see that your own kind of being a global crop protection player going to limit the ability to bring, let's say, PI or Bayer onto your platform and provide their unique technologies as a solution to the farmer? So maybe let's start with these two quick questions, and over to you, Vikram.
Thank you, and congratulations to the team of ThinkAg. I think it's a fantastic initiative, and very, very happy to read the report. We are building our own, but UPL follows a thought which is open ag. We are always open to partnerships. We're always open to collaborations, and that's how the company has grown over the last 30 to 40 years. So similarly, in Indian agriculture and in other agricultural projects through Nurture, we are building a highway, we're building a path, and we will always partner with other companies, other friends from the industry, and absolutely the whole gamut of startups. We treat Nurture as a startup. It is a young, dynamic team that's working on this. And there are many things that we can learn from other people, and we'll be very, very happy to collaborate. We are going to have multiple partners, and the end is the farmer. Agriculture needs to become, the farmer needs to become more profitable. He needs to become more sustainable. Right? The whole agri-food chain, the supply chain, as Sunil mentioned, needs to become more efficient. We need to lose out all the losses, and value that is being trickling away and being lost needs to go to the stakeholders. So absolutely, it's an open ag, open platform is what I'd say.
Okay, yeah. Do can you also tell me a little bit about providing services from this platform? I know you've got many other kind of service aspirations. Do you eventually plan to integrate that? What's the scope for that?
Yeah. So what are the pain points of today's farmer? Spraying is the first pain point that we addressed with the hundreds of sprayers that we have across India. And there again, we're working with a few partners on that. What are the other pain points? So there is machinery, there are services, and there are technologies. So we hope to provide all of them in a very systematic way to the farmer. So any pain point that the farmer has, whether it's rental of equipment, we will be looking at those kind of things, and other digital services.
Okay, yeah. Thanks, Vikram, and congratulations on Nurture. I think it's a great initiative, and we will all kind of very eagerly look at how that's evolving. Yeah?
Thank you, and we'll look forward to your contributions.
Sure. I want to move to Simon, who has both the global perspective and also the Indian perspective. And I want to kind of specifically ask him to maybe talk about, and he kind of alluded to it, briefly in his, kind of opening statements, on what is Bayer doing at global levels. And I know there is a lot that is happening in terms of digital solutions, digital initiatives across the world. And clearly, and you attributed some reasons why India is a more difficult kind of a place to kind of implement some of this. Maybe you can reiterate some of the unique challenges that a global company faces in taking some of those initiatives that you have in, let's say, Western Europe or other places, and bringing it to India.
Unhappily, I mean, basically, Bayer sees itself as a leader in digital agriculture, and with our climate field view platform, we have more than 150 million subscribed acres in 23 countries, right? So you could sit there and say, wow, but when you dissect it, you don't need to be 125 years in India as we are to realize that India is very different, and it starts with subscribed acres, but it's really also a question of consolidation. And I think a number of my speakers alluded to it. And just take a simple example. We're talking about drones now in India. Now, drones are ideal for smallholder farmers, but if you don't get a consolidated booking system in place, and you need to drive them 2 kilometers from one farm to the other, they're never going to be profitable. And I'm sure Vikram will have seen challenges with his spray equipment accordingly. So to a certain degree, the question is really, how do you use digital? And I mean, to my mind, to make it very simple, digital is efficiency and nothing else, right? And you need to have something that you can make more efficient to be successful. And a lot of people talk about Uberization, right? Now, why is Uber successful? Uber is only successful because there was an array of regulated taxis in the world, right? Where in India, we don't have an array of regulated tractors, which you can easily put onto an Uber platform and make more efficient, just as an example, right? So from our perspective, really what we're developing is FarmRise, and you could look at Nurture, you look at FarmRise, which is specific to smallholders, right? And I think this is where the whole topic lies. And I personally am still very much convinced that it always goes a little bit via your own team. So when you ask me, when I invest into these things digitally, be it advice, be it digital disease prediction tools, for me, first and foremost, they are there to make my team more robust. Because I personally do not believe that an Indian farmer, and I'm talking the 130 million smallholders and not the tomato farmer in Karnataka, will be following advice on a smartphone blindly. Right? I mean, I like to make that joke that if he cannot hit somebody with a latte, he's not going to take a decision. And so from that perspective, I think digital, first of all, needs to make our advice to farmers more robust, must make Indian farmers in that sense more profitable. We must de-intermediate, absolutely, I'm there too, right? And then you're going to be seeing more and more the professionalization, which really comes also with the demographics there and the network effects, where we all sit there and say it works. But simply said, to expect that an Indian farmer, especially a small one, will be paying somebody for advice on a smartphone, to my mind, is many years out still.
Thank you. I think that's well put. Now, moving on, I think, a burning question with a lot of corporates, and I would like to kind of address this to maybe Burgess and maybe also Ram. For many Indian corporates, when you look at this whole digital space and tech space, is a do nothing kind of approach, and thinking that finally my business is about a different kind of technology, whether it is a crop protection product that works wonderfully well, or nutrition, whatever. And if I have that, even if Nurture.com really is fully successful, they will have to come to me. Is that kind of an approach going to work, or do you see this over the next 10, 20 years completely disrupting the way ag is done, ag input, output is done, and hence you need to have an answer if you want if you're looking at survival over 10 to 20 years. I think, Simon, you want to talk about it also? Maybe Burjis first.
Sure. So I would say, first of all, is that you should never be complacent. All these large companies need to be aware of the technologies out there, need to understand that disruption can happen, because particularly in the smallholder farmer segment, you do have a large number of farmers that are not using these technologies, including the traditional ones. There's a large number of low-end consumers that could be better served in many ways. So there are opportunities for disruptors to come in. But I do see it as being much harder in this industry than in other industries for a number of reasons. One is that there's so much relationship building involved. You have to really convince the consumer that you can add value to him or her. So that's very hard to do. And companies that are already in this space do have a proven model of showing that to the consumer, and reputations that have delivered on that. So I would be wary of companies, be growing very big in a short time frame. I think that's unlikely to happen unless they can replicate that very well. And there's also so much regionalism in India. You have to understand local tastes, local preferences, translate your services into a variety of different languages. So that also takes time and is a barrier to rapid scale up. But definitely, companies need to work with startups to understand what is being on offer. And there's a lot of opportunities for synergies and working together.
Yeah, thank you. Thank you, Burjis. Simon?
Yeah, Burjis has basically said it all. Complacency is the biggest risk that is there, and you need to work together. And I think we need to work together as an industry. So really also Vikram's approach to open ag, I think, is absolutely essential to think through, because it's not going to be one that is going to be able to make it. And I mean, you partner with people like Big Basket, AgroStar. I think all of us do, right? To use bigger names, Sabunati, but also Amazon is out there, which is of interest as well. So I think we need to start having a discussion, and here ThinkAg might really be the right forum on how do you ensure that while there is a competitive environment out there in the areas where we need to compete, the advancement of agriculture takes place in a concerted effort. And that's obviously in a digital manner, because nobody of us is going to be able to touch 130 million farmers profitably. This can only go via digital means.
Thank you, Simon. Ram, do you any comment on this?
Yeah, basically, digital is only an enabler, right? So fundamental processes have to be good, they have to be in place, and they must benefit the farmer. That is my firm belief, that if something is not benefiting the farmer, you digitize it, it is not going to help. So in that sense, and many of the digital innovators are technology people, they are not agriculture people, right? So they need a lot of agriculture domain knowledge and agriculture understanding for them to deliver value to the farmers in a priority area where the farmer feels the need. I think that's where corporates come into picture. Corporates like whether Bayer or Godrej or any of these corporates bridge that gap. They are the ones who can provide that connectivity. UPL, for example, is a great initiative of what they're doing, nurture. So people with that domain knowledge can bring these guys together. And if you also superimpose what Dr. Taslima Arif said, that if this initiative can also bring in science-based innovation as a priority identification for science-based innovation to bridge the gaps in farmers' needs today, I think it will be a full comprehensive solution. I do feel that corporates will have a huge role to play, but they will have to take a constructive role and work with these startups for this. And to go back to your question, whether in the next 15 years, whether there will be a huge change in the way agriculture input and output are done, I do think that there will be a huge change. But as always happens with any innovation, you will have a lot of bandwagon, you will have a lot of stuff which comes up and then falls off, because quality at the end of the day is very important. Only those with quality will survive, right? And they will bring about fundamental changes in the way we will do agriculture in future. I think bandwagon will be there for some time, but I think eventually quality will survive.
Yeah. No, I think that's a great summary to continue. And And of course, it is also a very clear message to the corporates that when you partner and when you bet, you need to pick the right ones, because not everyone is going to survive out there. That actually almost brings us to an hour of this discussion. I think there have been some very, very interesting perspectives and point of view that have been shared. There is one person, who has some very deep insights, Hemendra Mathur. He is also been very silent spectator here, because I think he's moderator for the next session. But I must bring him in here and see what are the 3 or 4 key kind of takeaways that he got from this conversation. So Hemendra, would you like to kind of talk about 2-3 big takeaways from this conversation for the last 1 hour?
Thanks, Dr. Raman. There are multiple takeaways for me, and thanks for wonderful moderation and some very valuable insights from all the panelists. I think the big challenge is farmer adoption of agri-tech. I think that is the challenge that most agri-tech startups have. That is the challenge most corporates have. And I think one dimension which is very critical that I personally believe in, that unless we involve the rural ecosystem, essentially guys who run the village, be it an FPO, be it a Krishi Vigyan Kendra, be it an NGO, or some of these village level entrepreneurs, I don't think agri-tech is going to get the penetration that we all want to see. So I think we should not lose sight of the physical component in this digital world. I think that is extremely important. I think the second one I would say is, I think some of you already mentioned this, that for any agri-tech to scale, I think a platform approach is critical. If you're just selling inputs to the farmer, you make few thousand rupees. Probably that's not good enough for a startup to scale and make money. So how do you monetize that relationship? By procuring output, by helping him get cheap finance, by selling insurance to him, or by providing veterinary services. I think that mindset has to develop. And I think I'm often asked this question, why there aren't enough platforms? So the answer to that is that the whole agri-tech ecosystem is at a juvenile stage. The average age of an agri-tech startup is about 3.5 years. So I think it's too early for a startup to transform into a platform, but I think it is inevitable. Either it can happen on its own or through collaboration. I think the best part about the ecosystem that I like, that most startups are willing to collaborate, and I'm so happy to note that most corporates are also in that bucket. So I think those collaborations are critical for that acceleration to happen and probably reach to a stage where you can become a full-fledged platform. Yeah. So I think these are some of my takeaways. At ThinkAg, I can sort of say that, with, of course, on behalf of Ram, Raman, and Ritu, that we continue to drive this innovation agenda. We cannot do it without the support of all the people who are on the panel. So we are happy to engage. I think we have an opportunity to accelerate adoption of innovation if we work together. I think all of us are making efforts on their own, which is great, but if we can come together, it will be very fast.
Yeah, absolutely. Yeah, I think ThinkAg, really has the opportunity to kind of raise. I mean, already there's a great work that's being done, but to really facilitate that collaborative platform while also being compliant in terms of how we do the business. So, in the meantime, I think Dr. Taslim Marif has also pointed out that there is, over the last 2 years, you've had a large pool of problem statements, and these are being put out as grand challenges, and he is kind of welcoming corporate partnership. So I think this would be absolutely wonderful, Dr. Taslim. I think on behalf of all the companies, I'm sure we would love to see this, and many of us are also investing significantly into research, so we would also probably like to take this as interesting challenges back to our own organizations. Yeah. So with that, Mr. Ahuja, may I request, are there questions, burning questions? Do we have time for 5 minutes of Q&A? If there are some interesting questions there out from the participants.
I think there are questions. Maybe Raman can coordinate that.
Yeah. So Raman? Mr. Ahuja?
Yeah.
Yes. Yeah.
So I think, the key thing here is just picking up on the theme of investments. What if there is one thing that is holding back some of the corporates in India in investing in this space? What is it that people are pinpointing that? What is it that needs to change for corporates to invest in AgTech startups?
Simon, you want to take that? I think.
If I may,
Yeah.
I think I'm repeating myself a little bit, but it's really, we need to see business models that are proven to a certain degree where we see potential for scale. And just as a word of warning, I've said it in another meeting as well, very often when you meet startups and the only impression they leave to you is they're looking for investment and they don't have their heart in agriculture, they will not see money from us. So it's extremely important to see that these are people that are rooted in agriculture and that they are really solving for a problem of Indian agriculture and farming, and not solving for a problem of funding. That might be the one which comes to mind for me.
Yeah, I think Burgess's example of how they went about investing early in the dairy company and then acquiring it is a great example of how, if you really see value to your business, value to your customer, I think the investment will happen from the corporates, right?
Yes, I'd just like to add to that value proposition and market size. That's really what we look for when we're collaborating with startups. There should be a very clear value proposition already established. Proof of concept needs to be there that it's helping the farmer out, and there should be a large market size. It should be able to be scaled up significantly.
Yeah. Any other burning questions?
So I can add to it.
Sorry, go ahead, please.
Sorry.
Yeah, just to respond on this question, I believe that startups which have a unique technology or unique molecules or some deep tech available with them probably have a higher chance of getting a corporate investment than a supply chain startup. So I think that is one way to look at it.
Any other important themes coming?
Ram, one of the points that Ram made earlier in his comments, introductory remarks, was that many of the startups are actually being founded by tech players, people with tech background rather than domain. And this goes back to what Simon said. Now, does it mean that the space needs a cadre of ag qualified people to do it, or are there other ways of going about to do that? I don't know if all the large ag input companies started with people with ag background, but is that something that we should be looking at facilitating as we go forward?
Maybe Vikram can answer that, because it's just kind of perfect combination of ag and tech there.
Yeah, no, absolutely. Good, very, very, very good question. I think the sweat and travel and challenging food that all of us have suffered while learning about agriculture is very, very important. I think as Condi mentioned, that tech is just an enabler. The problem that the farmer faces, the solution that the farmer needs, can only come from expertise of our industry. So combination of both, very, very important. And I think more importantly, I think the experience of our industry is, I would feel, of course, more important. Otherwise, every other company would have solved it already. And AgTech has been the slowest one to take off across all because of this particular challenge. And I think Burgess also mentioned it's very small farmers and very unique challenges that agriculture faces. And that's why in the world of digital, agriculture is probably the last frontier, if people say so. Thank you.
Okay. I think that kind of brings us to the close of this session. So I want to again take this opportunity to thank all the panelists for their wonderful participative kind of contribution here. There have been several key takeaways, and we look forward to really think taking a couple of the key recommendations that have come and facilitating in helping all of us to collaborate and move this industry forward. So with that, thank you, Raman and Abhijit and Hemendra for this opportunity to moderate this session. And I hand this back to you.
Thanks, Raman. And would request everybody to stay on for the second panel. And over to you, Hemendra, for in connecting that dot with the investors.
Thanks, Raman, and thanks to Dr. Raman for wonderful moderation, and thanks to Simon, Burgess, Vikram, Tasleem, Sunur, and Ram for participation and some very valuable insights. So with that, we move on to the next panel. Do we have the panelists for the next panel?
Hemendra, I think the time was 5. So maybe
Okay.
we are a little early. Are they more?
Should we wait for them then? I think.
Abhijit, can you help? Are we adding people on as panelists here?
Ritu, it would start at 5 o'clock.
I see. So we have a break. Is that right? Is that
Yeah,
what
well,
we're-
yeah. It's a break.
Oh, we should have then kept all the panelists so we could discuss some of few more things. I thought that you hadn't put the other panel on here and they were in the audience.
No,
somewhere.
if some of the panelists are still there, I have one of the ways that we get people to come together to kind of take away the systemic risks that we have all been talking about. I know idiosyncratic risks are something that all of you can take care of in your own businesses, but there are systemic aspects to AgTech engagement that may actually need to be addressed. So 2 questions. What do you see, if any, are there any systemic risks? And what do you see are the kind of investments that public good investments that could come in to address these areas or other areas?
So I think it may be interesting to see what the renewable energy industry has done, because they've received a lot of government support and they're addressing a very valuable social good. And in the same way, agriculture is also doing that, both on the sustainability front and in terms of uplifting many people who are below the poverty line. So I'd really look into what sort of incentives, from the corporate point of view have been given to them, and to see if there's anything that companies themselves can benefit from, or if they invest in a particular startup. I've heard about accelerated depreciation, for example, interest subvention schemes, rebates on investments. There are quite a few policy tools available. So it'll be interesting to see what could be incorporated into the ag sector. And tying up with the ESG funds abroad also that could invest more money into the sector, make it easier for them to invest money if companies are addressing important social causes. So that's how I would start.
So Vikram, you raise your hand.
Yeah, I think a slightly different point, but we have started an initiative which we announced with Government Institute and NIM to help stubble burning, where we will be working with farmers on spraying instead of burning, and making sure that a biocomposter digests the crop and mulches it. So this is a pilot project that we've started. I think we've had some press releases. So again, it's the tech platform that was doing spraying and other services is now doing work for the greater good of air quality for Delhi and northern India, and stopping the whole challenge of crop burning. Thank you.
And Vikram, is this your technology, or you have taken it from one of the institutes?
No, we are as OpenAg, we always partner. So there's a combination of biocomposter of I'm not sure who's the technical partner. It could be Pusa and a few other digesters we are doing, and the Rohtak Institute is also very much involved in mobilizing and validating what we're doing. And welcome to more ideas, Hemendra, please.
No, I believe there's a lot lying in our agricultural institutions, probably we need to be a bit proactive and go to them to figure out, what can be commercialized. And this is a great
I
example.
completely agree. We have found some fantastic gems, great faculty, great ideas, great technologies, and we hope to partner with them.
Right.
Absolutely.
Yeah, I think there are areas, Raman, where, like Vikram mentioned, stubble burning. I think there are many other areas related to agricultural waste management or natural resource conservation. Various areas where there is perhaps a role for social enterprises, not necessarily someone who is on a profit mode, but someone who is more on a public good mode. That's what you mentioned. But I think they have to be funded by people who are otherwise making profits. So I think, or with some grants and various kinds of things. Some research projects can also be taken up on that front. I think there is a need for that. We should also perhaps identify some such opportunities and work towards them.
Is there, there's a question in the Q&A from Krishna that is there a need for a financial support from the government to, like they do for inputs? Is there a need for that, for something like AgTech services to farmers that, they can pay for it through whatever, a voucher or anything else, and then they get, the AgTechs get reimbursed by the government? Do you think a model like that could work, or has it worked in other parts of the world?
I have some thoughts here. I think that, I often quote this, that why did Indian IT industry do so well? Because nobody knew what IT was. I think that, government is in the business of governing. I don't think they should get into the business of providing more, complication. We feel that there is enough of business, there is enough of interest of farmers, there's enough of entrepreneurship in the country, and it should be allowed to work in its own eco space. At least this is what our thinking is, because and government has enough of other places. If you see the cost of fertilizer subsidy, the cost of water, the cost of other things, these are huge costs to the country. And I think those the government should focus on. We should not, in John F. Kennedy's words, is don't ask, right, what your government can do for you, ask what you can do for your country. So I would not request anything further from the government. And I think, to be honest, they're doing a great job. If you see what I see reality on the ground is a lot of positive things. Thank you.
Sure.
I have a different question, right? So I actually advise for us to think ag over here. So corporates are large entities. They have their own KRAs and goals to sort of meet, and they're not really meant to be risk taking necessarily, or measured risk, right? Startups are on the other end of the risk spectrum, where it's all about high risk. You have no idea where it sort of goes, right? So I heard a lot of you say, we need this sorted, we need all of that work in order to be working with a startup. What is the suggestions that you guys have to sort of bridge this piece? Because it is two ends of a risk profile. Yeah. So what would you suggest are ways to get the two ends to kind of come to a middle ground somewhere?
I think some commitments from corporates on working on pilot projects with startups that are strategically relevant for them and there's a connection with what they're doing could be a very good way forward. I mean, I personally am very happy to give my time to meet with startups that are of potential interest to us and learn more about their business model, what they're doing, advise them on how we could better work together. And I'm sure that there's, somebody at a wide variety of different corporates that could be doing that role, who could be the liaison, the official, liaison between the startups and the corporates. So that's what I'd recommend. And then take it forward on how we can do a pilot project to test out the technology. And then if that works out, there's better scope for investment, or at least, a customer relationship or potential acquisition opportunity in the future.
I know, but just you've been a champion for all these innovations here, right? So you're saying most corporates should have someone like you internally here to be able to sort of actually bridge that gap.
Very kind of you, Ritu.
I have a question for Bujis. Bujis, during your opening remarks, you mentioned that listed companies have constraints in investing in startups because of the pressure from shareholders on potential losses, right? So is this only peculiar to India or is it a global phenomenon? And what are the ways to overcome that?
It's a good question. I would think if they have proper corporate venture capital teams that are structured and that they have someone full-time for doing the evaluation, it would be less of an issue. I would think it's probably a global issue. This is just what I've heard from my team, so I haven't really explored it in that much detail. I'd be happy to. I think the process needs to be right of how they're going to evaluate the startups, how they're going to decide which ones to partner with. And if they communicate that very clearly to shareholders in advance, there's more scope for working together on that.
I think that it's important to unlock that question because I found that many innovation projects in the US, for example, biotech startups were funded by large listed corporates, and they took board positions. They influenced the research direction in those companies, made investments, finally acquired some of them or licensed their products. So I don't know whether there is a way of doing this, which we have to still educate our corporates in India about how to do it, so that they don't fall into the risk category as per the shareholders' perception.
Yeah, happy to work together on exploring this more and see what we could
do. UPL is invested in a few startups where we have 1 or 2 board seats, or even no board seats in some cases. But Burgess is very right that in case that company goes belly up, then you will have to have so many documents explaining. And then who's on the board, he has to sit and explain. And I'm on the company that didn't do well. So those challenges are absolutely there. But we actively participate and collaborate with them.
Great.
Slightly different track. This whole issue of farmer incomes, and doubling farmer incomes. Apologies for the background noise. I think everybody's now starting to think about going beyond the classic demand supply curve to see what are the sources of value that can be captured. With this carbon sequestration that is now coming back into fashion over the last couple of years, how do you see that progressing forward? And obviously with this new commitment to climate goals, where do you see other sources of value capture can emerge? And what do you think AgTech can do in that space?
So a few thoughts I have is outcome-based pricing. I know some companies are doing that abroad, where they're making their solutions in a service form and then charging the farmer based on productivity and profitability improvements that the farmer experiences. So I think that if we get the tools right to measure that correctly, and we can ensure that there's no fraud or anybody tampering with the information, I think we could turn that into a viable business model. And on carbon sequestration, again, it's an issue of measuring it properly. If you can make reliable estimations of how much carbon is being sequestered in the soil, then you can definitely give those payments to farmers doing that. But it's very hard to measure that correctly. The satellite technology isn't quite there yet, from what I understand. And also measuring it in the soil using soil samples, that's a very tedious process. So I don't think it's quite there yet, but it has tremendous potential for the future.
Vikram, your thoughts? Anything about water markets? Water is a key parameter, key input for ag, and there is no pricing that happens.
Yeah, so I look at it slightly differently. I think that there's a line I use is when the farmer cries, nobody bothers. But if a housewife cries, literally a government can fall. So I think food inflation, export, these are things that, politicians and policymakers unfortunately have to worry about. So if you look at cost of food in India, cost of inputs in India, the farmer has got squeezed. Whether we like it or not, that's the fact. Every time commodity prices or export potentials are there, Government has to look at the fear of inflation and other things. So our poor farmers are caught in the middle of this situation. And I think that all the investment in storage, in value addition, in food processing, I think will slowly help both the government, the farmer, and the end consumer. But presently, it's a tight situation where the farmer is getting squeezed. Thank you.
I think we have panelists from the next panel joining in. Hi, Harry. Hi,
Hi,
Sandy.
Rita. How are you?
Hi, Harry.
Hi, good to see you.
To see you too. Good. I think that last 15 minutes of extended dialogue, Vikram and Burgess, thanks a lot. I think
Thank
a
you.
lot of interesting perspectives which we will work on, and I'm going to sign on, at least from the video. Over to you, Hemendra.
Good afternoon to everyone. We are on to the second panel. The first panel was on Indian corporates, how we are looking at Indian AgTech, and we have another interesting panel lined up now on the perspective of some of the global investors on Indian AgTech. Just to give you a background, we released ThinkAg Investment Report 2021 on 15th of July. And we did a similar panel on that day with some of the investors from India. And I think in general, the mood was upbeat. Most of them are willing to do more deals in the sector, write bigger checks, and happy to engage more with the AgTech ecosystem. Clearly, they see more depth in terms of the quality of entrepreneurs, quality of business models which are coming in Indian AgTech. Also, the investors, the number of investors who are willing to put write checks is going up. Of course, there were some concern areas which they highlighted, essentially around farmer adoption. Can these solutions drive sustainability for Indian agriculture? And some concerns around investor exit. So I think this is what we discussed when we had this panel on 15th of July. I think these are some of the points for discussion for today's panel also. And for that, I hand it over to Ritu to take it forward. Over to you, Ritu. Thank you.
Thank you, Hemendra. And, I'm super excited to be sitting in a room, I'm going to say, but I guess I should say sitting on a screen with close to $1 billion worth of capital between all of the people here to be deployed, some of it in ag. So super excited to be here. And I am joined today by Harry. Harry, welcome back. This is the second time of having you on our panel discussing investments in India. And so Harry manages Rabo Frontier Ventures. And so I'm going to push Harry a bit on trying to find out what's different compared to what he said last time. Yeah, and I'll have to use my memory to as to what you said, Harry, last year. So warning about that. I have Sugandhi Mehta joining us from ABC World. ABC World Asia is a offshoot from Temasek. Sugandhi, correct me if I'm wrong. And looking quite seriously at ag and has definitely made investments into ag in India. So, and looking at more, I believe. So we'll chat more about that. We also have Arima-san, who's joining us from Beyond Next Ventures. Beyond Next Ventures started investing in India, about a couple of years back, Arima-san, if I'm correct about that, right? So, super interesting, coming straight out of Japan, walking into the India market, walking the streets of Bangalore like any other Bangaloreans. So hats off for that. But forget walking the streets of Bangalore. It's, we're walking the street, the fields of God knows where in Karnataka as well. So, love to sort of hear about those experiences of walking into the AgTech scene in India straight out of Japan. And last but not the least, I finally have Daniel here. Daniel, welcome on board. Daniel heads up ADB Ventures. Daniel, ADB, of course, is not a newbie to the India scene here. So, but this is the venturing arm looking at things much, much earlier stage across Asia, including India. And so would love to sort of hear from Daniel and ADB's perspective on actually moving, at the start of the value chain as opposed to later into the value chain where all of us are typically used to seeing ADB play here, essentially. So very excited to have everybody, as I said earlier. If from the report here, what I thought was super interesting, that half of the money that flowed into India last year actually came from international investors, right? It's not half the deals, but that makes sense. A lot of smaller deals gets done locally, but a lot of sort of the follow-on capital, there is interest globally, and half of the 400 million odd that came in last year came in from investors that are sitting outside India. So obviously there is an interest in AgTech in India. And I would love to sort of unpack around the room here as to, why, right? Like what's exciting, what's interesting about AgTech in India that is getting people like you to look at opportunities, who have options of looking at opportunities elsewhere, still look at India. Harry, may I kick off with you? You're a veteran at this, I know, for a while, so love to hear your perspectives.
Sure. Yeah, thanks, Ritu. Well, I think there are a couple of reasons actually why we are interested in investing in India. One of them is more from a macroeconomics perspective. We see the GDP growing year over year. The income levels are improving, and that's also reflected in the agricultural sector. And there's a huge opportunity there. So a huge opportunity. It's 40% of the GDP of India, and a huge opportunity means a huge market. I think Ernst & Young recently calculated it's a 224 billion USD market opportunity. So there's a huge opportunity for us as an investor. And next to that, and I love that saying, if it's working in India, it's working anywhere else. So I think there's a lot of things to do in India itself, but there are certain AgTech solutions which can also be applied elsewhere. So we always look for scalable solutions. And that brings me also to my latest point. I think if you look at India and how it's actually positioned in comparison with other countries, they are well ahead in their AgTech technologies. So I think they can be a front runner in that sense. So that's why we're also interested in making investments in India.
And Harry, if I might just stay on you for another minute, do you think that the last, when we talked in the past, it was pre-COVID, yeah? And this is now post-COVID, or the last year has mostly been COVID. Any changes in these kind of macro factors that you've talked about that make it India an exciting destination to invest for AgTech? Would you say that the past years has actually helped or hurt, or, because we saw numbers decline, right? From a total value of investments, numbers dropped to 35%, which was at odds against what happened globally. So any changes from your side that you've seen?
Yeah. So if you look at the numbers on itself, it doesn't look very promising. But if you look at the underlying unit economics of the AgTech companies itself, of course they were hit by COVID, but you see now a rapid recovery. Mm-hmm. So it's just a huge. It has, of course, a huge impact, but recovering quickly. And that's also recognized from an investor level. So we see a more diverse investor landscape, more investors stepping into India. So that shows that it's, of course, it has a huge impact, but it's not a structural thing. So it will be recovering quickly.
Got it. So Gandhi, if I may come to you. Yeah, I mean, I think in the midst of COVID, you closed, was that your first AgTech deal in India?
Yes.
Yeah, and so just from ABC World's perspective, why you've got all of Asia sitting there? Why look at India? What's interesting specifically about India? And are there some specific areas that are more exciting than others for you?
Sure, thanks. Thanks, Ratu. Good morning, good afternoon, everyone. Maybe I'll just spend a minute introducing ABC World Asia. We're slightly new on the horizon. So as Ritu mentioned, we're a private equity fund dedicated to impact investing. When we say impact, we're basically looking to back businesses that have a positive, evidence-backed and measurable impact on either the society or the environment. We raised our first fund about 2 years ago. It's a $300 million private equity fund backed by Temasek. So there's absolutely the affiliation there. We're a team of about 14. We're all based in Singapore. We've aligned our impact themes to the SDGs, and we've sort of narrowed down a few themes for this fund, one of which is sustainable food and agriculture, which quite elegantly ties up to SDG 2, around zero hunger. We've already made 2 investments under this theme, one of which is Cropin, alongside Ankur Capital. Cropin is our first investment in India, and it tells you a lot that the first investment is an AgTech investment. We also have a food investment in a plant-based meat business that's based out of Australia, but it's expanding rapidly into Asia. We look to invest anywhere from 10 to 30 million US in sort of minority stakes. Cropin was a very interesting investment for us, and one of the few underlying themes around India that have made it exciting, and we think AgTech will continue to be exciting for our fund over the next 4 to 5 years. Digitization is a big factor. I think farmers having mobile phones, expansion of sort of tele networks, the improvement of payment infrastructure, the ability to pay sort of digitally over phones. And then COVID, I think, we believe will have some serious change in farmer behavior on the ground. I don't need to sort of belabor the macro points. I think India is the largest agricultural market in our part of the world, especially given the smallholder focus that we'll have from an impact investing perspective. So we see huge opportunities. We've seen great quality of entrepreneurs. I would love to hear the rest of the panelists' views on, you do see more and more ambitious entrepreneurs taking on the ag challenge, which was not always the case. If I just talk about challenges, I would say that, travel or being able to diligence is a challenge for us as an international investor. A lot of ag investing is really, you really have to look and feel and, be there to get a sense. And then ticket sizes. I think we're, they're smaller deals. So we have to really think about going early into the investment process. So I'll pause there. Thank you.
And Sugandhi, if you were to sort of just, if I, if I just come back to the question that, Harry mentioned the macro in India that was sort of exciting vis-a-vis others, right? Is that sort of the same lens that you saw? Since, you are geography agnostic, right? In some ways, you're more, SDG aligned here. What is there something that you could point it to, or is it just the macro that makes India interesting for you to include that as part of the purview?
No, I think it's the macro is obviously there, but we're an Asia-based and Asia investor. I think we do look at AgTech opportunities in Vietnam and Indonesia. I would just say that the depth of the market is just much bigger in India. So for every problem, if there's 5 people coming up with a solution, the numbers would be different in some of these smaller countries. So I think it's just a depth question that there's a lot more people tackling the problems. We see a lot of similarities with the Southeast Asian countries, and we continue to look at opportunities there too.
Got it. So what you think from an entrepreneur perspective, there's a lot of depth here, so that makes it interesting to evaluate, at least to see,
And scalability, you can underwrite a scalable business plan, right? I think that, and the valuations, I'm sure we'll get to the valuations point at some time. With valuations where they are, you need to be able to scale. You need to underwrite a business plan that can definitely grow.
That can sort of scale that, right? Daniel, would love to get you in here. Again, ADB has an Asia mandate, right? But India, why India? and why AgTech in India? What's exciting about that? And I'm going to add one more part for you. Why early?
So of course, I mean, I think there's no need to say that, on the macro level, India itself is an attractive market, right? The size of it. But I think just the gaps and the needs across the supply chain that exist in India, which represent significant opportunities, is maybe greater than anywhere else. Of course, some of these gaps also reflects maybe some underlying challenges. There's a reason why some of these gaps exist, which also prevents, creates a challenge in itself. But just looking that there are so many parts of the supply chain that needs investment in new technologies, and at the same time the size of it, that makes it, of course, very, very attractive. For ADB, as you said, ADB traditionally has been more a traditional financier of infrastructure of financial institutions. I never really had an opportunity to invest in more technology-enabled solutions in earlier stage. But we really feel that that combination of technology-enabled financing, technology-enabled infrastructure, and really looking at how technology can really amplify the impact that's from this more traditional investments is critical. They both need each other. I mean, I don't think technology on its own can solve it, but nor can the traditional type of investments either. So it's really that intersection of larger, more traditional capital with higher risk technology plays that I find really, really interesting. And India, as you mentioned, right, it has so many opportunities to play in. And of course, at the same time, we're seeing a number of factors like the traditional ones, the mobile penetration, the growing use of financial or fintech solutions, the growing access to remote data. All of these things are enabling solutions that I think maybe 5 years ago wasn't really technically or financially feasible. So that makes it really exciting, right? So we're really piggybacking on what's really happening elsewhere, I think, in the sector or in the startup sector. You mentioned COVID. I think it's interesting, right? I think for us, and then jumping there, I think it's, of course, short term, there is both some negative and positives, maybe a growing push for digitization, maybe even some automation. But what we're feeling is that what's really creating is also a push and an appreciation of the value of quality and resilience in the supply chain that might take a little bit longer time to manifest itself. But I think buyers and players in the supply chain will value quality and resilience in a different way than maybe have done in the past, which will in turn open up new investment opportunities.
So how do you mix here of different things coming together that provides perhaps fertile ground for innovations here to be taking off is sort of what I hear you say. Yes, yeah, Daniel, right? So I'm going to go to Arima-san here. Arima-san, I mean, I know that you have a background in ag, so but as a fund as BNB, right? I think I mean, I have two questions for you. One is obviously India and why India, but in addition to India, there is ag, right? That you're pulling in here. So both of which are new to you as a fund. So walk me through, the thought process there of jumping into India and jumping into ag.
So yeah, hello everyone. So my name is Rima, and I'm a manager in the agri and food technologies capitalist in Beyond Next Ventures. And mainly so our fund is investing in Japan in startup, right? So last year, so we went to Indian markets, and already we invest in India startup, maybe it's 10 startup and so on, I think. And I already invest in 4 agriculture startup in India. And so I think in India, agriculture market is very unique in the a little similar Japan, because about farmer, so so Japanese farmer is small farmer. That means less than maybe 10 R and 5 R and so I think. So they are mainly small farmer. So it's similar in India, I think. So India, there are a lot of any small farmer, right? And in Japan, there are a lot of any technology for small farmer, and I think so. Any Japanese technology can any collaborate with agriculture startup in India, any company area, I think. So I think this is one point we go to in India, and yeah, we want to any introduce any technology to India startup, and yes, we support any scale up in India agriculture startup and so on. And of course, I think in India any founder is very smart and aggressive, I think. So yeah, this is very yeah, I love India and founder agriculture and so. And last one, so yeah, I think in India, so there are very a lot of any business opportunity. So because there are not any setting detailed regulation rules, I think. So in Japan, so there are a lot of any regulation rules, and yeah, so a little difficult to scale or any challenging for agriculture startup. But in India, I think so very good to any environment for startup to challenge. So yeah. So yeah, that's a reason. So we got to an Indian market, and of course, very interesting agriculture startup in India. And yeah, now already we invest in agriculture startup.
So did I hear you correctly? And you said that there's more regulation in the AgTech sector in Japan than there is in India.
Yeah. So
well, I'll remember that one, because we always get asked about sort of regulatory stuff in India and how tough it is. But that's interesting to sort of Arimasan, if I may stay on you, I just I want to go a little more granular with and sort of discuss. I'm sure all of you have done deep dives into the India market in AgTech, about thinking of what's interesting, what can work, what won't work, bringing in learnings from other geographies that you might have been operating in or investing in basically here. So, when Beyond Next Ventures looks at this space here, is it, are there certain areas that, BNV believes are just much more interesting within AgTech that, are, I know you've made a range of investments here from input to output, food, etc. Right? So is it a whole chain kind of approach, or are there specific areas that you're much more bullish about than others?
So you say so. What is we mainly focus in agriculture, and you say right? So
yeah, what within AgriTech is interesting to you in India?
Okay, so yeah, our fund is mainly invest in deep technology startup. So that means any biotechnology, any medical healthcare, any of course agriculture, and so now I focus on any bio and agriculture startup. That means any plant-based food or any biotechnology agriculture. That means any inspect any for any cows or any animal healthcare, any so yeah. In conclusion, so we focus on bio and agriculture, so more deep technology in India, I think.
Okay, and that's super interesting to hear, because as the report found very little investors and investees in that space in India, and the panel just before this discussed quite a bit, and Tasneem from CCAM talked a lot about how we need to see much more of that happening. I think everybody in the biotech space will be super excited to hear that there are investors here now that are willing to sort of back that, which I think has been kind of missing in the ecosystem. That's been our experience at Anchor anyway.
Yeah.
Harry, over to you. So if I were to sort of, I know you like fintech and AgTech. Any, do you want to expand on that, or any changes in your thesis of, if we get more granular, things that have kind of faded away, but things that have come on board here?
Well, it's actually interesting to say, if I look back 5 years back, and talking about fintech and AgriTech, when I mentioned it like 5 years back, everyone was looking at you very puzzled. What's the blend between these two? Is there any relation between AgriTech and fintech? And does it make any sense? But now, even in your report, you're mentioning the interesting crossover between fintech and AgriTech, and that's also our USP as a corporate venturing arm that has our interest. So there are a lot of opportunities globally, of course, but also in India itself. So we look at input players. So we invested in AgroStar, for instance, because we think, as what we have seen with the big e-commerce players, financial services and e-commerce or input players are blending together. But the same thing is actually happening on the output place. So that's why we have an interest in marketplaces and trading platforms. In India itself, there are, of course, there's a challenge in the supply chains in the sense that it's very, very fragmented. So it's working out well for a couple of parties, but still difficult to scale. And next to that, because of the huge smallholder base in India itself, what is it, 120 million? It's I think. And that's really to the heart of Rabobank itself as well. It's to see how we can actually unlock financial services to mostly unbanked people, and that actually really solves also a problem. So because we all know the finance gap of smaller farmers, they need to buy the inputs, but the out of the income will be realized after the season. So how to bridge that financing gap is an important one to crack. So that's also we are looking actively in that space and pursuing initiatives in that space. And it's good also to mention that we, as a bank, also have a presence in India. So we do, of course, we do investments, but next to that, we have also collaboration with a numerous amount of startups in India, through our Rabobank or Rabobank Foundation.
Yes, I wonder why you get asked about AgTech and fintech. In my opinion, all AgTech is fintech at some level, because without that, the chains don't move. So Sugandhi, over to you. I know you've been thinking about different aspects here. Are some more exciting than others?
No, I mean, if I bring it back to your report, I think we continue to be interested in the digitization, precision, sort of mechanization, robotics part of it. And of course, any enablement for finance, for which I think data is the key. So, who can get us the data? I think where we are still finding our feet, honestly, on the investing side is, the business models, like you mentioned, on the input side or the marketplace side, where this whole concept of, there are a lot of parallels between the e-commerce growth and the growth that some of these guys are projecting, and the significant amount of capital is needed before you can get to that kind of monetization phase. And I think as a small fund, we're still trying to sort of wrap our heads around those business models, and I'd be really keen to hear everybody's views on whether that parallel between how e-commerce went and how some of these marketplaces are growing, is that a parallel that you draw in your heads also? So those sectors we're still trying to, we're studying, and we're having sort of early views, but very bullish on any technology, mechanization, very interested in aqua tech also, which again we see a lot in Southeast Asia. So those are the ones that we're quite convinced about. I think the ones on the marketplace and supply chain sort of side, I think we're still thinking that through.
Harry, what's your answer to that? Right. So I'm going to try to get some cross questions here, as I promised all of you in my mail. But I heard Sugandhi's question is that the e-commerce companies took a hell of a lot of money to build out here, right? To be drawing those parallels into the agriculture space. Is your view that those can be done with cheaper money, or not cheaper, lesser money, or is it going to require the same level of investment? Yeah.
Yeah, well, I was thinking about what Sugandhi was actually saying, but what I'd like to add to that, well, there is of course a similarity. Yeah? So to fuel an e-commerce business model, they add financial services to it, not because they want to play bank, but it just fuels their business model. So that's a similarity what you are seeing. Well, with the e-commerce players around the globe, also focusing the food and ag space, and they are lagging behind in maturity. If you compare that with the Alibabas and the Amazons, but what's very different though, I think if you really want to play an important role in the AgTech sector, and I think we discussed that before, you finally need to build a full stack AgTech company. And a full stack AgTech company means that you can cover the input space as well as the output space, and that also make the linkages to the market. And that's very different from what actually the regular global e-commerce players are currently doing. So, and that's for me a striking difference between what you see in the general e-commerce players and what's going on in the AgTech space.
No, absolutely true, right? So I think we keep talking about this here about full stack, right? And where input, output, financing, it's actually an ecosystem gap, right? And so it makes sense that your CAC is low. You utilize what you spend for CAC for as much as you can, right? If you have that.
Yeah, and the thing is, if you look at the market opportunity in the input size, it's limited. So it's calculated, it's a little less than 2 billion. But if you look at the market opportunity at the output side, it's 12 billion. So the opportunity at the output side is 6 times bigger than on the input size. So and the margins at the input size are very thin. And if you really want to create value for everyone in the value chain, start kicking off with the smaller farmer, I think you finally should also make the link to the market side.
Fair point. Daniel, any views from your side?
So was it for me there? Sorry, just to crack up.
So I just want everyone here to get a bit more granular of, we talk about
I think
is there something that you don't like and something
that
you like?
I'm getting a bit nervous actually on the whole full stack concept from an investment point of view. Because it feels like I do understand where it's coming from, but it feels like a constant search from where are the margins going to come from? And you stack it all up, which looks great on a PowerPoint and even a spreadsheet. But in practice, you lose that focus, you lose that depth, right? And then everyone can't be an end-to-end integrated player, I believe. So I'm a little bit, how much capital, particularly given the risk level, takes to build this end-to-end platform, marketplace, and supply chain, is needed. It's just with investment I had on, is also challenging, which I think, so that's one of my concerns when I hear full stack, not just in agri, but elsewhere, is what does that really mean? And what's it reflecting? It seems to be people start off with a marketplace and then they say, we need to move upstream or downstream and we need to add financing. And it is constant search, right? So that worries me. But what I'm interested in, I think, is this overlap between what it comes to risk, really. I think fundamentally, there is a misbalance or a lack of proper distribution of risk in the supply chain. I feel like in order to encourage people to take the risk that you need to take to shift some of the systems, the risks are currently sitting with the wrong people, I think. with smallholders, with the people in the supply chain, not with the big buyers. So we're asking the smallholders to take the risk to shift these agriculture systems. And these are the least potentially able to absorb that risk. So solutions that can actually redistribute risk better, I think is a huge potential, not just in insurance, but in other ways. And as part of that also comes into mechanization and all this equipment. Unless we can address the risk issue, I don't think we can actually stimulate uptake of the solution at scale. So that's kind of where we're coming from.
Got it.
Yeah, and to add on that, it's also
Yeah.
information. It's also an information asymmetry. Yeah? So there's a lack of information on smaller farmer level and establish relationships which hampers them in their position towards to the buyers.
Completely.
Got it. Got it. I want to switch gears a little bit here, right? So given that you guys all have global viewpoints here, I think everybody here would love to sort of hear, we heard you on the opportunity, we heard you on what's sort of exciting. What is it that you see similarities, challenges, differences from AgTechs globally, right? As you sort of look here, is it, of course, India is a unique market, said what works in India works elsewhere, perhaps, we'll come back to that. What are there similarities in the problem statements? Are there similarities on execution? Are there challenges specific to India, or should we be how should those of us embedded in India be thinking about this? You want to kick off, Daniel?
Yeah, happy to. I mean, I think, of course, a lot of people here from across the world with a lot of perspectives on this. But I do think, yeah, India is unique, but not that unique. It's easy to say that India is unique, has its own aspects, and find a lot of reasons why India is big or why it's not possible. But we do see a lot of commonalities across this market, right? I think nowhere is really successfully, I think, cracked how to improve the yields, how to make the supply chain more efficient. At least when we're looking at more developing markets. So, if that's good or bad, I don't know.
It's fragmented and small farms, it's long supply chains. Yeah.
The issues that exist in India exist elsewhere, and for better and for worse, I don't think anyone really cracked it anywhere. So that means that there's more opportunities, of course, but it's also hard to know what's could be transferred into India and vice versa. So in that sense, I think there's a lot of similarities. Unfortunately, I don't think anyone really knows what works elsewhere. So that's the starting point in economic. But I'd be interested to hear.
Any works elsewhere, by that, Daniel, I mean that whether the Indian companies work elsewhere, or you mean other solutions elsewhere? We're just at a level of maturity in this whole ecosystem that we still are to see what plays out. I mean, we at ThinkAg had an absolutely fascinating conversation with PDD in China, right? Where the scale of that was in agriculture was absolutely impressive, as how farm to consumer was happening, right? So, and we all internally talked about, why not here and why not that and all of that kind of stuff, right? So there have been examples of how, models have actually exploded elsewhere, but maybe not enough. Is that what you mean?
Yeah, and I think, of course, we're looking at it and we tend to think, but we look at China, of course, as an example potentially, right? But even there, if we look at the structure of land holdings and how farming is taking place in China, it's quite different from most of India, for example. So it's hard to sort of transfer those learnings, I think. But if we look at, say, Indonesia, Vietnam, Bangladesh, I think we see more similarities.
Right.
So it's more the fragmentation, I think, that sort of changed the nature of it. That we do see uptake, I think, and it's interesting, right? The rest of the world is booming, and not booming, but it's taking off in terms of more investment into really deep tech in upstream, right? We're seeing in the US, Israel, Australia, but it's really going into commercial large farms, right? The transition into more fragmented land holdings, I still think is that is the big challenge one way, right? So, but the building blocks are getting there. I'm grateful for everyone who's building marketplaces, because I think those are essential for eventually adding these additional things that can drive, real tech uptake, right?
Absolutely. Two of the biggest investors last year were Alibaba and Walmart. And they obviously have the front end of what's happening to be looking at some of the back end rationalizations that they will need if they want to tap into, the consumer front face here. Arima-san, from your perspective, do you see the startups being different here? Are there things that they could learn? Are there things that we could learn in the Indian ecosystem from what happens elsewhere? And feel free to pull in your ag background as well from what you might have seen as on the other side, perhaps working with innovators.
Sorry, so it means sorry, I don't know. So what do you say? So
no, just trying to sort of understand, and most of us sitting in India, we're primarily looking at companies in India, whether AgTechs in India have and you see AgTechs in other countries as well. Are there similarities? Are there differences? Are there things that can the Indian ecosystem can kind of absorb with what's happening globally to kind of accelerate?
Okay. So yeah, I think in India, so maybe so ecosystem is very good. Better than in Japan because Japan is not so good ecosystem. So ecosystem means any a big company and any government, so of course startup and so in agriculture farmer, right? So I think in Japan, so little there are any conflicts for each other in the so little not so good ecosystem. But so in India, I think so. So I don't know so government rule and regulation in detail, but I think the startup, of course, a collaboration with the other startup in India, I think, and so startup ecosystem is very good. So the point is,
I'm just going to ask you questions because whatever you say is music to our ears. So I think our, the other co-founders of ThinkAg are also somewhere on here. So please do listen in Hemendra, Raman and Ram that, Arima-san saying we actually do have a good ecosystem here. So I'm glad to sort of hear that. So that's for me. So Gandhi, do you see differences? Do you see, are there things that could be brought to the Indian ecosystem? The Indian AgTechs, let's call it. Let's an ecosystem, of course, there's always things that you can kind of do. Or is there things to learn out of Indian AgTechs for the global AgTech markets?
Sorry. Sorry.
No, I was just a couple of points, right? I think this fragmentation issue is obviously very, very important for India and Africa. So solutions that apply to large land holdings in Australia and the US. When we were looking at crop-in, that was something that we learned quite quickly, that the problems that a farmer in the US who has large land holdings faces are quite similar, but then actually very different from an empowerment perspective. I think a lot of the solutions in India will come from India. I think the on the ground empowerment, which again, technology, access to information, access to finance will bring, will make the Indian, I hope that the Indian solutions come out, which are unique for emerging markets and can actually, leapfrog kind of the traditional development of, because ag is such a complicated ecosystem, you almost feel like the whole ecosystem has to move together. And I'm optimistic that technology and solutions that come out of India will allow ag issues to also sort of skip a few stages in India and allow solutions to come faster. I'm very interested to hear or to see the social change and how that feeds into ag change, because obviously farmers have generational changes. The newer generation is all digital first, and will have different perspectives about making decisions on what kind of inputs I should use, how I should sell my produce, etc. So I'm interested to see how that plays out, and that could be interesting also. So and I would echo, I think the Indian ecosystem is quite strong. There's the VC ecosystem is great. It's great to see more and more people like us who are new to the space being embraced and getting a lot of opportunity to learn from other sort of veteran investors. So I'm very optimistic. I largely think that a lot of change on the ground and solutions will come from within.
So Sugandhi, am I hearing you say that, you know, Indian AgTech will solve for Indian problems, right? So you don't see Indian AgTech necessarily going global, or global AgTechs actually coming into India?
I think the way I would put it is that Indian solutions are solutions for smallholder markets, and they will export and have exported to other smallholder markets. I think the AgTech solutions that are focused on the US or developed markets will follow their natural path, right? They go to the US, they'll go to Australia, they'll go to Central and Eastern Europe, and maybe a few years later, once they've kind of exhausted that, they'll get to the smallholder market, is my sense.
So looking at smallholder markets, you think scalability of AgTech solutions can cross boundaries?
Yes,
how that piece pretty much sort of works, and whether it's India with the world or otherwise, but it's from market structure that's defining it as opposed to geography that you sort of see that.
Yes, and
Harry,
technology
would you agree?
and payments,
Yes,
I would say. Those are the, landholder structure, access to telecom, access to payments.
Would you agree with that, Harry?
Well, it really depends how it actually is structured, because for me, you know, if you compare India with other countries and other continents, it's of course less mature. Although, you know, it's catching up, but, you know, if you look at the market share, it's there's still way to go. Interesting enough, you know, if you look at the global challenges in the AgTech space, it's pretty similar in India. So there's nothing much different. So fragmented supply chains, getting access to finance, etc., etc. Also, and that's I think my view is a little different from what Sugandhi actually is saying. Also, a business to farmer model is very challenging. So it's very challenging in India, you know, how to reach out to the smallholder farmers in rural areas. But it's pretty much the same thing with farm management systems selling into large farmers in Brazil. It's and so I think I agree on that some of the solutions, especially in the fintech AgTech space, so financial solutions can be expanded and deployed elsewhere, but it really depends on how you actually what your go-to-market strategy is. Because if it's a business to farmer model, it will be a challenging model. So what we have seen globally is that the business to farmer model are that much challenging that most of the companies change their model to business to farmer model, which seems to work out properly. So that's my take. And of course, you know, if you look specifically on what's scalable, I think from a precision ag perspective, so cropping is actually a nice example, but it's a business to business proposition. So satellite imagery, which help big companies out in monitoring their crops, etc., which is a business to business model, and it needs to be scalable. So and again on the fintech AgTech space, I think there are potential scalable solutions and on the input side, but I don't think on the downstream side it will be quickly scalable, because the supply chains in India are so fragmented. It's really difficult to scale. So even if you look at the Ninja cards and vehicle, large companies, well funded, you know, they're not and India itself has such a huge opportunity. So they're still busy with cracking that nut, you know, scaling throughout India, and it will take at least some time before, you know, they actually are thinking about entering into other geographies.
I mean, they're operationally heavy companies, and technically the TAM is large enough domestically. So, you know, the reasons to step out are also lower. right? In some respects, to sort of, as you said, the output side is, much higher than the input side. So they can sort of.
Yeah, exactly. So that's also, yeah, of course, yeah.
The burning question, yeah. So Gandhi alluded this to this earlier. AgTech is no longer, sitting in the corner. It is square, mainstream, huge amounts of capital going in from all sorts of players. So one of the things that the report saw was the diversification of funders here, right? And we actually couldn't get some of the corporate funders to come talk about that because they're not quite allowed to, right? But fundamentally, larger, more massive startups investing in their back end supply, more generalist investors, moving from, food delivery to the next level piece here. So there's a change of foot, right? Essentially in this whole ecosystem. And that change also has an impact on valuations, the impact of obviously the entrepreneurs in the ecosystem. Does that make it not interesting to invest in India? Is that you see the value here still being much lower? I mean, I know that US AgTechs raise a hell of a lot of money and a lot of, much larger valuations. It is a change. This is a change that has happened in the system that wasn't there. So we'd love to sort of hear your views on this changing market. Yeah. Now I put you on the spot, Sugandhi, since you brought the valuation piece up here.
I think I broadly see it as a positive. On the positive side, there's more investors, there's a lot more capital going in, and there are, that attracts better quality entrepreneurs, that attracts more interesting solutions. So for Indian AgTech, I see that as a positive. As a mid-market fund, I think valuations and type of business model goes hand in hand. So I think any business model that requires a significant amount of investment before the break even or the monetization kicks in, I think becomes challenging for us. But we do find pockets of value, and we do think that it's a unique time in the cycle to support some really interesting sort of entrepreneurs. The other way we try to sort of address this is, as I mentioned earlier, is go earlier in the cycle, right? So try and do smaller deals, but get in earlier where there's more of a valuation opportunity. So yeah, I would say, mixed bag. I think it's great for the ecosystem. It's great for the industry. We just have to work harder as investors to select the right business.
Yeah, that goes to us. So Sugandhi, the early stage investors, when late stage investors move early, things change in the market is what it does. Yeah.
It is.
Daniel, any changes? I'm sure, Daniel, this impacts you as well.
Yeah, it does. I mean, it's a double-edged sword, right? To some extent. I think it's great that you have this, you can call them more generalist tier one VCs coming in, because I think it gives a little legitimacy to the sector, right? There is a real, it's not a niche sector anymore.
Yeah.
And it forces us to think bigger, right? I think when you come from clean tech, AgTech, you start thinking in quite niche and sort of certain scale, right? But this forces you to think a much bigger scale in a more aggressive way. So I think that's healthy, right? To challenging that mindset, is it beyond India? How big can it become, right? So I think that's healthy, pushing us to think that. On the other hand, I think a lot of businesses are still fundamentally bricks and mortar or a lot of offline activities, capital intensive, and whether you can actually marry that with a VC or even private equity type of returns, I mean, it's yet to be seen. And of course, an early stage investors, I mean, the risk of getting priced out potentially, but on the other hand, there's opportunity to go earlier stage and take more risk, knowing there are other people there willing to carry on if the opportunity is big enough, right? So I think it's more about getting used to it rather than anything else, right?
Okay, so
and I hope it will stay.
Have to get used. No, I'm with you on that completely, right? I mean, it is a very large market. There is no reason for this to be niche. I mean, we're all going to eat, is what I like to say. So fundamentally, that's not going away. So we should sort of see that more happen. Arima-san, any thoughts?
Sorry.
Yeah, go ahead.
So my only concern
No.
always is, that is the government or regulation, because I think someone alluded that earlier. The government's not really upset if you get the wrong Samsung phone from Flipkart, right? But the farmer getting the wrong sort of deal or the wrong set of terms from a out marketplace, or so that's one thing I think that bothers me on the hype side, when these things become very, very public.
And especially if you're going to go for blitz scaling without actually addressing the issues on ground here, and sort of somewhere that is a sensitive area, and any government is going to step in if you're going to be sort of messing around with that whole piece. So fair point. I think that's, and I think it's also probably worth seeing that I mean, the valuations demand growth and scale, right, at a certain pace here, right? So the execution of that on ground is still, to play out, I sort of say.
Rita, can I ask a question quickly there?
Yeah.
As being India, I mean, some of it is slightly more aggressive behaviors, right? Does this in India like force a conversation that maybe didn't surface before? I mean, this kind of aggressive expansion forces a certain conversation that maybe politically or other reasons were a bit sensitive. I mean, are you seeing any? I'm curious. Like, do you see
No,
that
I don't think
happening out of
so.
this?
I don't think so. It's still very early days, in my opinion. That's just my personal opinion here. I think it's still very early days for those conversations. I don't think. I also think that there's very little. There are models that are directly working with farmers, but they're very small pockets at this point of time, right? And they've got to be sensitive of how all of that works, right? So I think the rubber hasn't fully hit the road, if I can put it that way. So I think that we have to wait and watch. But I do think that I agree with Sugandhi that it is a sensitive area. You've got to, I mean, food production is a sensitive area, let's be clear, right? So fundamentally, food pricing is a sensitive area, right? So you're playing with two very fundamental tenets of what a government delivers. So if you mess it up, I think that will be when people start to open the boxes and say, hey, what the hell, right? But too early. Harry, any views on this, on sort of this, the mainstreaming of AgTech?
Well, it's actually a good sign that there's a more diverse investor base, new money is flowing in, and it's also a sign of maturity that general tech funds are actually now stepping in. And so I'm echoing what Daniel is just saying, because what we have seen, specific AgTech funds are doing fine, but the most for entrepreneurs, it's very attractive, to line up with the general tech funds. And usually, what we have seen, that the general tech funds are actually also able to pick the winners out of all the AgTech companies. But I think it will be it would be fantastic, also for the India ecosystem, if we see some exits coming up in the nearby future. I think that will be very helpful. New money will be flowing in, and it will be also a good sign for attracting new talent. So because I think one of the challenges, and I am very pleased by, that ThinkAg is trying to bring all parties together. But if you compare that, what's going on, for instance, in the Netherlands or Israel, I think there's still a way to go. So of bringing parties together, and not only from an investor startup perspective, but also how to learn from each other. So I think that's one of the challenges India is facing nowadays. And well, it's good that we are here in the panel to discuss that. But it's also from a research perspective, as I know from a couple of years back, it was just very difficult to attract talent into the AgTech sector. Fortunately, it's now changing, and and again, it will be helpful if we can show some nice exits in the India AgTech system, so that will attract enough new talent, new entrepreneurs. That actually facilitate the acceleration.
With you on that completely. So what I'm hearing you say that it's not too expensive, that global investors are going to say, hey, this is not the place to go, right? So I mean, it's not at a level to scare people away of saying, look, it's a bubble, I'm not going here. It's a healthy increase, much needed increase to kind of get that ecosystem actually moving. Is roughly what Arima-san, any thoughts from your side on sort of is the market in agri-tech in India overhyped, or is it still got ways to go?
So yeah, so yeah, Indian market is very growth. I think of course food in the any vegetable and fresh fruits, and so everyone eat, right? So in the people's every year is increasing, so the market is growth, I think. But so in Japan, at first I say farmer is similar in India side and in Japan side, right? So that means small. There are a lot of any small small farmers. So it means they have no lot of any cash, right? So I think so it means products is for example any agri inputs, and so they can't buy a lot of any inputs, and so it means for startups, so India startup, of course Japanese startups, so have to reach a lot of any customers, so that farmer, right? So and of course agriculture mainly commodity product, and so there are a little and gross margin, I think. So so a startup for startups, so have to think it is a little challenge for agriculture startup. It means so gross margins are little smaller than as any technology or any as any area startup, and of course they have to reach a lot of customer and farmer, and so these 2 points is I think so very challenging in India, of course, also so in Japan. So yeah, it's so has to clear in this. So this if this programs clear, so the startup in India can more growth up, I think.
Okay.
Yes.
I know we're nearly out of time. It's 6 o'clock. If we can, there are 2 quick questions, so I'll just take very short answers from whoever wants to sort of go. The first one says, would any of you bring any of your outside India AgTech investees to India? Anyone?
Well, say it again, Ritu, the line was
So
breaking.
if you're invested into an AgTech outside India, right, would you consider bringing it into the India market? I mean, getting it to grow into the India market?
Well, I can mention one. We invested in Joint Data. Joint Data is actually a Dutch initiative, which is actually a data infrastructure for the food and agri players. So it's actually facilitating upstream and downstream data flows from and towards the farmer, which actually protects the farmer as well in who is actually getting access to the data of the farmer itself. So and I think if you look at how and data is the new oil, everyone is saying that, and especially also in particular in the AgTech sector is extremely important, because we all know most of the smallholder farms are unbanked. How can you actually facilitate them in providing financial services? And that's you can build a regular model as what banks are providing. So you need to find out new data sources to build out your risk model. So data is extremely important, but in order to do so, you need to protect the position of the farmer. And I think it's also mentioned already earlier during the panel session. So the smaller farmer is not in a position to protect himself towards all the other players. So I think that is one of the initiatives I would love to bring into India.
Okay, good to sort of hear that. And I think I have one more question. I'm going to broaden the question. If you guys have interacted with sort of, the startup ecosystem, and I am suspecting this person means that, from the incubation and, sort of other kind of services, et cetera, that are being offered to ecosystems outside India. Are there anything that you see that can happen in India that that you see happening in these other markets that could happen in India?
Can I ask one thing here? And this is almost like I hope there's some entrepreneurs listening in here, and really two requests. One is, I think in some markets, I think you think, and we always say India solutions, but I think sometimes it's helpful to think globally on day one, thinking about problems that has larger pain points where maybe the market is not ready yet in India for some solutions, but it might be a neighboring market ready. So that mindset of thinking beyond your market and looking for like regional problems to solve and being willing to take that risk is something, and go and take that risk. And as an investor, I'm willing to back those and have that mindset, right? I like that mindset. For me, it's not a problem of too much risk. It's too little risk quite often, right? And I would like to see more risk. And I think there's capital out there that will back those risk takers. So that's something. Take more risk, be braver, because I think that is a key part. And I don't know whether agriculture ecosystem in India has encouraged that because of the past challenges, right? But I've seen it, of course, in other markets like Holland, Israel, but also Indonesia, so on. There's more risk taking.
Thank you for that, Daniel. I couldn't have asked for a better ending of the session, right? We're having global investors sitting here saying, please take the risk, please look behind your horizons, build those companies. We're coming. We don't think things are too bloated. Things are exciting. Things are going the right direction. So, for all the entrepreneurs who are listening in, I think that should all be music to your ears. And all of us here look forward to seeing more innovations coming out of the ecosystem. So I want to thank all the panelists for taking out the time, giving us your thoughts and views. It's been super interesting to have this chat with you, for me, and I'm sure that's been true for all our audience as well. So thank you again.